Am I on? Dude, I hate when you do that. Am I on?
You did it. You see yourself?
Stop. Leave me alone. Good afternoon, everybody, and welcome to the VectorVest YouTube live stream, Trending Thursday. Glad that you're all here. As you can see, because this is live TV, Joey messes things up and puts me on, and I don't even know that I'm on. So for any of you who are getting to see me for the first time, hopefully I don't disappoint. For those of you who have been here a long time, thank you for being here and supporting the channel. If you haven't already, please subscribe to the channel. Please subscribe to the channel. We are growing by leaps and bounds. So that means that you guys like the content, and that is awesome. So again, who's typing mug in the room? I'm not giving away a mug. And everybody can see each other's chat like you cannot do in the Jockey Club. You can see everybody's chatting here, and guess what? Jay, be good. Hey, Tom, make sure that Jay's being good, all right? So, excuse me, live TV, you'll see me just be what I'm being. So, there we go. Good to see you again, says Jim. Jim used to be a part of my VectorVest user group here in Charlotte. Jim, glad that you're here. So it's a good name that I haven't seen for a long time. Joey's going to take my chat away for in a second. So, one, thank you all for being here. Two, you can take it away. Trending Thursday, what's it all about for all of the new people that are here? Trending Thursday is all about what's happening in the news. We cover everything from what's going on in the market and how to trade the market to what stocks are making news. We know that gold is making news, oil is making news, coronavirus is making news. And then I always take some time to find stocks that catch my attention that not a lot of people may be talking about. So this is a great place to stay on top of what's going on in the market. And the biggest thing of nothing else, as VectorVest, as a VectorVest instructor, I teach you on how to trade in the market. If it's the right time to be in the market, not the right time to be in the market, and things to look at from that perspective. So with that being said, let's get into it. And in case I have not introduced myself, my name is Glenn Tompkins. I'm a senior instructor here at VectorVest. To my right, off camera, is Joey. Say hi, Joey.
Hi, Joey.
Joey is my producer. You guys don't realize that what we do here is a big production. Behind me is a green screen. I can put whatever I want to put up there. We got a mixer. I've got 4 monitors. I got 2 32-inch monitors. Joey's monitors ain't as big as mine because he's not me.
I know how to use them, though.
But he says he knows how to use them, though. So this is a lot that goes into putting these on for you guys, and I'm glad that you like the content, at least enough to keep coming here week after week. So we always get started with what's going on in the market. So we're going to pay attention to what's going on in the VectorVest software. I'm going to pull up the home page of the VectorVest software. And for those of you who are not subscribers, I'm going to invite you to take a trial. In a minute, Joey's going to put the link in the room to take advantage of a VectorVest trial if you're not a subscriber, okay? And take it. And at least if you like it, you'll keep it. If you don't, you won't. I'm not going to try to sell you anything in here, all right? So if you like it, keep the trial. If you don't keep it, all right? Here it is. But this is the home page of the VectorVest software. And the biggest thing that we do is we time the market. We keep our subscribers on the right side of the market. So if there's any new people in here that really believe that you cannot time the market, I'm here to tell you that when we time the market, we don't guess at what the market's going to do tomorrow. We are trend followers, and we stay on the right side of the trend of the market. So as I look at this homepage, I can tell you that with all of our indices today, where are they at? Dang it. They're all up. All of the major indices are up. The Dow, the NASDAQ, the S&P 1 and 500, and our VectorVest composite. For new people, what is that? The VectorVest composite is an indexed arithmetic averages of all of the stocks that we track. And currently we track 8,179 stocks. So when you say the market moves, you say the Dow is up today 100 points. So the Dow says that the market's moving. The NASDAQ is up about 0.1%. We say the market's moving up. The S&P is up about 0.2%. Hey, the market's moving up. But we have an indicator that looks at all of these stocks and then some in the VectorVest composite. It tracks the move of almost 8,200 stocks in one ticker symbol. And because of that, we feel that it's a better representation of the broad market movement, all right? So all of the major indices, to include the VectorVest composite, are moving up today. Our daily traffic light into the market is one tick into the green. All right, and when you get to a green light, what do? Joey likes to go super fast in his truck. Me, I have a Ford Excursion. I pull away from the light slowly. Not Joey. Joey just wants to, and he's got a Chevy. He's got, ugh. Anyway, today, one tick into the green, VectorVest advocates caution when buying stocks at this time. Well, why do we advocate caution? Remember, from a market timing perspective, why would we? Well, we have a more extensive color guard or a more extensive graphic that looks at what's going on in the market. Notice that this is looking at the last 6 trading days. Over the last 6 trading days, we track the movements of that VectorVest composite, the RT of the market, which is the short-term price trend of the market, and the BSR of the market, which looks at the market's overall health. We are the only system out there that does look at the health of the market. We track all of these indicators on both the day-over-day and week-over-week basis to assign colors. If the color is red, that means that indicator on that day went down on a week-over-week and day-over-day basis. Yellow means that the data was mixed. It either went up on a week-over-week and down on a day-over-day, or down on a week-over-week and up on a day-over-day, something along those lines to give us the yellow lights. Green lights means that the market has gone up, or that indicator has gone up on both a week-over-week and day-over-day basis. So if I'm looking at the last 6 trading days, we've got a mishmash of colors, red, yellow, and green. To the red, the yellow, and the green. Who did that? That was way back in the day. It was another rap group. You don't remember, do you? Anyway, oh man, I forget. Somebody in the room might know it, but it's to the red, the yellow, and the green. Anyway, so with that being said, we've got a mixture of all of these colors going on. The market is having a hard time making up its mind in which direction it truly wants to go. So that's why we advocate caution. The color guard tells us to be cautious in the market. And with all of that, how do you invest in the market right now? You play the market as it goes. This is more of a trader's market where we're up one day, down one day, up one day, down one day. It's hard to be a longer-term investor in this current market's conditions. So given all of that information, let's watch from a news perspective what's making the market look this way. All right? So I'm going to go out to our first story, which always covers the news.
Getting X-Clan and Steel Pulse.
X-Clan, there it is. That's what it was. No, it wasn't Steel Pulse. It was, I told you somebody was going to get it. To the red, the green, and the red. The red, the green, and the yellow. The red, the black. Yeah, something like that. That was X-Clan. I knew somebody was going to come. Was that Kareem? Is Kareem here? Was that Kareem? Stephen Williams. All right. So I knew that somebody was going to. It was X-Clan. I knew somebody would get it. Anyway, let's go to the first story because we always talk about the 3 things that move markets. What moves markets globally? Earnings, interest, and inflation. That's it in a nutshell. All right, earnings, interest, and inflation. So, what is going on from an earnings perspective? Companies, we're in a new earnings season right now. Some companies are missing, some companies are making, and sometimes companies are making their earnings, but the forward guidance brings the stock's price down. I don't have an indicator that looks at forward guidance, but I do have an indicator called relative safety that looks at the stock's probability and consistency to make or meet their earnings expectations. But what is the government doing in the midst of all of this pandemic? All right, we all know that the pandemic is hurting people. Jobs report came out this morning. Another 4.4 million people lost their jobs. We're up to 26 million people out of work. That's a lot of people out of work, folks. But that's to be expected when we're at stay at home. Small businesses not able to keep businesses open, so they're laying off people. So emergency grant to small businesses averages about $4,300 per business. Now, the first stimulus that went out to the small businesses, people like Ruth's Crisp got money. They got a lot of money. What happened to the small business people? People like Shake Shack got money, but they gave their money back. What happened to the small business? And you know something? I saw another news story that said that this money that's in that grant for the small businesses is going to go just like that. Because there's a lot of businesses that are going to be putting in money or putting in loans to keep themselves afloat. So just keeping that in perspective. New applications have been suspended due to oversubscription. 4 million businesses have applied. That's a lot of people who are out of work trying to get into that stimulus. All right, scrolling down a little bit, the small business loan program designed to keep workers employed is out of money. And some Main Street businesses owners hit by the coronavirus pandemic says that it simply isn't enough to keep their businesses alive in the first place. But we're putting a lot of money out there. The federal government has issued emergency grants totaling $3.29 billion to 755,000 small businesses. All right. Along with loans worth $5.7 billion to nearly 27,000 businesses, according to the data released this week. So the Fed, the government, has opened up all the spigots that they could or that they can to keep the economy afloat while everybody's being laid off. Next one. Looking at economy week ahead, jobless claims, U.S. home sales, PMI. And this was done yesterday, a few days ago, prior to the jobless claims coming out. Indicators this week are expected to show more economic fallout from the new coronavirus and efforts to contain it. So that was just from the jobless claims. Home report's going to come out. Sales, home sales, PMI are all due to come out before the end of the week. And we only got one more day. And we're going to see what's going on with those. But everything is pulling heavily on the market to the downside. Indicators show the fallout. Japan releases March trade data. Economists expect exports to have fallen as the coronavirus disrupted supply chains and cut overseas demand. All right, so those are some of the things that are affecting the market. Now let's go see what it looks like on a graph within the program. We're going to go back to the VectorVest software. Go back, is that here? Yep. But now we're going to go to the market timing graph. All right, down below, market timing graph. This is the market. This is the movement of the over 8,100 stocks in the market, shown here in candlesticks on the VectorVest market timing graph. This is COVID-19. The coronavirus hits. We got our subscribers out of the market way earlier before this. All right, if you're not a subscriber, then man, this was an excellent opportunity for you to get out. We've been preaching about this for the longest time. It's etched in stone. It's in our literature. It's in our daily newsletters every night where we got our customers out. Well, that's past. That's history. What's going on now? Looks like we might have found the bottom here on March 23rd of 2020. All right, after all of this has happened, stimulus has come in, the whole 9 yards, market's moving. What's the market doing right now? All right, I can't see the chat, but what's the market doing now for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days? Last 2 trading weeks. Let me zoom into there. Last 2 trading weeks. What's the market doing? Market's moving sideways. Does that not add credence to the homepage that we saw on the VectorVest software that this was a time to be cautious? Markets up a day, down a day, up a day, down a day, up a day, up a day, down a day, down a day, up a day, up a day. Look at today's activity. We have an open candle. Look at the wick at the top of the candle. That is a lot of selling pressure. And you know what that candlestick pattern is known as? It's known as a shooting star. Whereas the price has risen from the open, not a lot. The opening price was $40.99 on the VectorVest composite. The price right now is at $41.02. So we've only gone up like 3 cents on the composite today. And look at the big wick, a lot of selling pressure on the VectorVest composite. What does that mean? As an investor in the market, this is a time to be cautious. The market's not moving up. The market's not moving down. This is a trader's market. As a trader, you take advantage of the good days. When the market's up, you buy stocks long. When the market's down, you play the market to the downside. As a swing trader, as a longer-term investor, it's tough to be in this kind of market and try to make consistent gains when you're up one day and you give it all back. All right, I'm going to close that out, and I'm going to go to our watch list of stocks. You didn't open up my watch list. Oh, there it is. Go to the viewers, watch list viewer, go to trending Thursday. Today is 4/23. Here's the stocks that we're going to cover today. And I'm going to look at the 2 that we cover specifically for the market. One is the VVC, which we just looked at, and the other one, for those of you who are not subscribers, many of you will look at the spiders. So let's look at the both of these to see what's really truly going on in the market. I've got them highlighted, and now I'm going to right-click, pull up a stock graph, pull this over. Here's the spiders. Same kind of scenario. S&P 500, a little bit in the sideways pattern right now. I've got a 20-day exponential moving average where it shows that the spiders went across, went up. But where did it get stopped at? Tom, type it in the room. Got stopped right at a level of resistance. This is why I'm always going to look at support and resistance on a graph to help me gauge where I am. What I'm looking for before I start to jump back into the market. Let's make sure the market, even on the spiders, gets above that level of resistance. It gives me more clear room to move up. Go back to the VectorVest composite. Also above that 20-day exponential moving average. Here's that indicator RT moving higher as the market's moving higher. RT looks at the short-term price trend of the market. I would like to see it above the value of 1, showing that the market is in an uptrend. So even though we're trending higher, we're not in an uptrend. Uptrend is denoted as higher highs, higher lows. We can't get higher highs as the market is moving sideways. So from a market perspective, unemployment is out there, stimulus is out there for small businesses. There's a lot of things going on, but if I'm investing in the market as of right now, this is more of a trader's market than a trending market. As COVID-19 hit, that's a trending market to the downside. We started moving higher and now we've gone back into a little bit of a channel. All right, so that's where we sit as far as the market is concerned. Any questions, Joey? Oh my gosh, does it take that much to give me a question?
There's no questions.
All right, why you couldn't have just said that a long time ago?
Because I was...
Oh my gosh, Joey and I are going to fight live on screen. All right.
You're going to get beat up on
I'm not getting beat up on screen. All right. I don't think so. I don't think you got that much beating uposity to go and beat me up. You ain't got that much beating uposity. All right, let's go to our next story. All right, gold. Gold is making, everybody is jumping all happy with gold. All right. JNUG, big gold stock, did a reverse split yesterday. The stock, which was trading at about $7.50, is now trading at about almost 80 bucks. Last week or the week before, it was rocking and rolling, but now the reverse split is in place. You still own it if you have some, but they took some of your stocks away to replace, for every 10 stock, they give you one, but now you've got one at a higher price, Now, how does that affect gold? Well, here's a story called Fool's Gold. Fundamental, behavioral, and technical evidence hint to a significant correction in gold. Here's some gold stocks. We're going to take a look. We have a watch list of gold stocks, but here's some gold stocks that are listed in this story as well. An investment case for gold as a fiat inflation hedge is most likely premature. Betting on gold remains among speculators, which led often to disappointing returns historically. And then there's a lot of more information in regards to gold as well. But this is somebody's opinion. Let's go to another story. All that glitters is not gold. The market rally since the S&P 500 lows on March 23rd has led impressive gains across many sectors. So two different stories, all right? This has reduced the number of attractive buying opportunities over the short to midterm. We know that the Fed and other major central banks have almost no limits in terms of the assets purchases they will consider. The Fed has opened up the spigots to get whatever is needed to get the market back or the economy back on track. I do more than just article, blah, 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 blah. My advice to you, my violent friend, is to seek out gold and sit on it. All right, again, this is another story, another opinion story. So, with that, I've taken both of these stories and we're going to take a deeper look at stocks that are gold related. Let's go back to our watch list. In my two stocks that I'm looking at, Kinross Gold, and again, we're going to look at JNUG. Notice that my list is sorted by our master indicator VST. Look at where JNUG sits. Less than 1 on our VST. But look at where Kinross Gold sits. I could be introducing you to another way to invest in gold. Let's analyze Kinross Gold. undervalued. The value says what we feel the stock is worth. Relative value, the stock's upside potential. Kinross Gold has great upside potential as compared to a AAA corporate bond. Relative safety below 1. When earnings comes out, it may or may not meet its earnings expectations. RT, the short-term price trend, tells me that gold or Kinross Gold is shooting to the moon, just like Alice. Pow, zoom to the moon. This is shooting up to the moon. How about Kinross Gold grows their earnings at a clip of 33% a year? All right, I'm liking that. Now, Direction, JNUG, the miners, a little different than gold. The miners are not doing nearly as well, and this is the triple leverage ETF on the miners. And relative value, relative safety, and the values will all be in line. It's tough to give those triple leverage or these ETFs the same values or value their relative values and relative safety because they track either an index or a basket of stocks. So keeping that in mind, let's still take a look at both of these on a graph. We'll right-click, view the stock graph. Here's KGC. Look at that. I'm liking that. Above the 20-day exponential moving average, the stock's price broke above 2 levels of former resistance and has just been running. Now look at KGC today. Another stock, open candle, it gapped up twice. Once yesterday and once today. But look at that. Excuse me. A lot of people have made a lot of money in a short amount of time on Kinross Gold. I'm thinking that we've got some profit taking going on. Understand, along with when the market has a weak dollar, gold tends to run. Our dollar is still strong compared to other economies across the world. All right, because of everything that we're doing, our economy, our dollar is still strong, which is still hurting gold. As our dollar does get to be devalued, probably then gold will really take off. But look at the move. Today, nice up day with a lot of give back. Be careful on gold. And my other one was JNUG. It split. There's the split. The stock's price jumped up in price. But look at it. JNUG, and everybody was hot and heavy. Woo, JNUG, go, 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 go. Because we're in the trader's market, I would take JNUG on an up day, and on a down day, probably take half off the table or close the position, probably not holding it overnight. But overall, JNUG is rising, not above that 20-day exponential moving average. That's something else that I'd like to see before I jump on it, and this is the miners as opposed to regular gold. So I'm going to do something else. We have a watch list. I got a watch list for everything, but I've got a watch list for gold stocks. There they are, right here. And I've got about 80 stocks in here, I think. Let me go check. I got 47 stocks in here, 47 gold stocks. To make this list, the stocks had to be above $1, and the average volume had to be greater than 100,000 shares. Keeping that in mind, BTB, there's KGC, the second best stock in here by value, safety, and timing. Look at all of these stocks. All of these stocks have VSTs above 1. Look at all of these stocks. Mainly have RVs, upside potential greater than 1. The safeties may not be the best in the world, but the stocks have good, these are value plays where stocks have good upside. A lot of these are going to be undervalued. Look at that. Going through, a lot of these are already undervalued, which is a good thing. Some of them are overvalued, but for the most part, the majority of them are undervalued, and they're moving. So I'm going to show you, we saw the graph on those two stocks. Let me show you a watch list average of all 47 stocks. Down here, view the average watch list. You want to know if it's okay to start getting into gold yet? Put this on a 3-month graph. Overall, the watch list of 47 stocks above the 20-day exponential moving average. Overall, with today's activity, open candle, where is it sitting? Right at a level of resistance at $15.62, and it just broke through a prior level of resistance at $15.26. Gold is on the move. RT is above 1. So if I'm looking at the average, the watch list average of all of these stocks, gold is rising. Just step in. Don't back up the truck. Don't go buy a whole bunch of gold. Step in on the ones that are working. And because the market is moving a tad bit sideways, don't be afraid to take some of those profits off the table early. All right, but this is the gold stocks, all 47 stocks in my watch list and what they look like on a graph. for the last few days. Look at this. Up, down, back and forth. But today, gap up, broke up. Today may not be a bad idea, but if you go look at the stocks, sort this by percent price change. Same thing I would do with my coronavirus stocks. Sort them by percent price change. Stay on top of the ones that are rocking and rolling. That may be a good way to go. All right? So that's gold. Any questions, Joey?
Yeah, 1 second.
All right, so Joey's going to give me questions. But I like that. All we did is we went to the mining gold stocks. We put them all into one watch list. And we filtered the watch list to make sure that every stock in here is at least greater than $1 and it has an average volume of at least 100,000 shares. All right, Joey.
Why don't you show the Huey with the Midas graph?
Why don't I show the Huey with the Midas graph? Because a lot of people in the room are not subscribers to the software. I didn't want to get all into that, and then there was going to get a lot of questions about what am I looking at. But that's why I stepped back. For the people who are in the room, I thought it was an easier correlation by looking at the stocks that I had in the watch list to look at those, look at the graph of all 47 stocks. But remember, a lot of people here on YouTube are not subscribers to the software. The people who are subscribers would get a better understanding of that, and I don't want to confuse the people who were not subscribers. All right?
Can you share the watch list?
Can you share the watch list? I can, sort of, kinda. I'm going to give you, and put this on 50. What I will do is let you take a screenshot. That's the best way I can do. Take me off the screen for a second, Joey. Take a screenshot. I give you 10, 9. I'm going to count militarily. 7, 3, 2, 1. You're done. You're done. All right. There's the first set. Hopefully you've all taken a screenshot. And what I'm going to do is I'm going to come down a little bit. What's my last stock? EGO. Let's scroll down. All right. Take a screenshot again. 10, 9, 5, 4, 2, 1. All right. And I'm going to do it one more time. Scroll down. What's my last stock? Scroll down. And there's my last set. Now, once Joey gets this video put out, you can actually pause and do the same thing again. But from the time being, while you're here, that's probably the easiest way to get your watch list built. All right, whether you're a subscriber or not. If you're not a subscriber, guess what? Now you can build your watch list wherever you trade your stocks. But if you're a VectorVest subscriber, we have the analysis to do a little deeper than just a watch list. All right, you can put me back up. Yes, Joey, any other questions?
Yeah. Where do you use volume in your analysis?
Where do I use volume in my analysis? Let's say I'm going to look at a stock. Let's graph all of these. I would put volume on a graph here. Do I have volume up here? No. Let's add a parameter. Price volume. This is where volume would play a role, is if I'm deciding whether or not I'm going to get into the stock. And not only that, I would add a moving average of volume. Go to volume, add moving average. Let's go add a simple 20-day moving average of volume. And now I can quickly see if the stock's price is trading above or below its value. Wow. And then I can use that from a graphical standpoint to see if the stock is moving up and if it's doing so on good volume, along with the RT moving above the value of 1. All right, and that's a good way to make a determination on the stock as well.
The last question was, what was that sorted by?
The list, any watch list that I normally look at will automatically be sorted by my master indicator, VST. But remember, I changed the sort to percent price change to bring the fastest moving stocks that were moving up today to the top of the list. But normally, the list will be sorted by our master indicator, VST. All right? We're good to go. All right, let's go to the next story. Joey is the guy that's determining which questions I answer. So if I don't get your question answered, it's all Joey's fault. All right.
The question needs to pertain to the story.
Joey said I got nothing to say about it because Joey says the question has to pertain to the story. All right. I'm just a talent.
Well, they want to know all these other answers.
Okay, so Joey's making sure that he's picking out stories that pertain specifically, what did I say? Questions that pertain specifically to the story. So if you ask a question, make sure it does, and Joey will pick it out. All right, oil. I've got somebody, a friend of mine, who's asking me about, he texted me, he said, is it all right to buy oil? I said, nope, not yet. Why? Because we got an oversupply. But it's low, right? Yeah. So it's a good time to buy. Not yet. Why? Stop asking me questions. I'm telling you that it's not the right time to buy. All right, let me ask the question. For those of you with anything, what's going to drive oil prices higher? Anybody? All right, check the room. What's going to drive oil prices higher?
Driving?
Not driving. Well, driving will too, but that's not what I'm looking for. What am I looking for? You don't know what I'm looking for, but
Nobody's saying anything.
Nobody's saying anything? Really? What's going to drive oil prices higher? Demand. Demand.
Demand, there you go.
There you go. Demand is. The demand is not there. We got a lot of boats sitting in the ocean waiting, holding oil at a big expense per day. We've got oversupply. We've got so much oil, we can't even refine it because we got so much oil. Well, if the supply is there, where's the demand? If there's no demand, is oil prices gonna go up? No. Now, you've seen a spike in oil. All right, I'm not gonna say that you haven't, and that's got a lot to do along with some military things. Some boats in Iran messing around with our ships and blah, 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 blah. There's some tensions going on there, but we've got an oversupply of oil. So let's go, scroll down a little bit. Tumbling oil prices will have a broad regional impacts on the U.S. economy, hitting states far afield from Texas, which is the engine of the national energy boom during the past decade. Wyoming, Alaska, Oklahoma, North Dakota, and West Virginia all depend more on mining and energy extraction than the Lone Star State. All right, that's one story. Let's go to another one. Now, here's a story that talks about oil rallies on Gulf tensions and output cuts. So the Saudis cut back on oil. A lot of people are trying to cut back on oil to lessen the supply in the space. So because of that, people are like, hey, it's time to go buy oil. Not yet. That cut in oil production still got to catch up to all the oversupply. So yeah, people are starting to get oil to rise, and you're like, man, it's getting ready to go. But that's on intentions later. All right, this is speculating, saying that, yeah, the cuts are going to start to drive up demand. We still got to get through the oversupply. All right, so keeping that in mind, let's go to my oil stocks that I have in my list. Oh, did I do it the wrong way? I probably did. I did it for me that way. All right, so let's go back to my list. So let's talk about that. 423, what are my oil stocks? WTI. I've got 3 stocks in here for oil. I've got WTI, I've got MPC, which is Marathon, and I've got CVX, which is Chevron. I hate when that happens. MPC. Let's check these out. All right. Chevron, overvalued. Well, because we got a spike in what people perceive is going to happen with the cuts, driving the stock's price higher. People are paying a premium to own the stock. Marathon, undervalued. I do like that as a play. And WT Offshore, pretty fairly valued. Now I'm looking at Chevron, which is overvalued. Upside potential, not there. But Marathon, RV above 1, it's got good upside potential as compared to AAA corporate bond. WTI, not so much. None of them have a safety above 1, which means when earnings comes out, most likely none of these stocks will meet earnings, which means what? It becomes a little less attractive to investors because if they miss earnings, stocks prices are going to go down. Let's see which ones are in an uptrend. Actually, none of them yet. So a spike in price doesn't mean it's in an uptrend. Look at the RT. Well, let me back up. Chevron's got an RT above 1. The stock is considered to be in an uptrend. Marathon, way down in the RT. This stock has gotten beaten up, still hasn't moved yet. WT Offshore is right at 1, about ready to move into an uptrend, but not quite yet. Look at this. From an earnings growth rate, Chevron growing their earnings at a negative rate. Marathon at a negative rate, and oil again, WTI at a negative rate. So if I'm trying to be long-term on oil, I'd rather be in a company that's growing their earnings. How about that? All right, our earnings per share are all positive. All right, 537, 614, and 17 cents. But I'd rather be in a stock that not only has positive earnings, but is growing their earnings. Let's look at these stocks on a graph. All right. So not the industry graph, I'm looking for. Right click, look at the stock graph. So people are talking about, yeah, oil's moving, it's time to go, 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 go. All right, let's put this on a 3-month graph. What's Chevron doing right now? It's above the 20-day. What's it doing? It's meeting a level of resistance right now. Not ready to touch it yet. Look at that. Boom, sitting at about 89.98. All right. Stock's trading at 87.40. RT, because the stock is moving sideways, back and forth above and below 1. Remember, when RT is above 1, the stock's in an uptrend. Back and forth because the stock is moving sideways. Let's take a look at Mpc Marathon. Same kind of scenario. Stock's moving sideways. But wait a minute. This is oil stocks. We should be jumping all over them. That's the news. Let the software analyze the stock, look at the graph, make a better decision. And when I say to my friend, it might not be the right time to buy oil, I ain't just whistling Dixie. There's a reason behind it. All right, look at the volume. Somebody asked me, when do you use volume? Look at the volume on the stock, pulling back. Let's go to the last one. Now, WT offshore is starting to move higher. Little wick at the top. Got a lot more volume with it. RT just got above 1. If I'm looking at the 3 stocks and I'm looking at trading by price action, WT offshore might be one that I keep my eye on. But make sure you buy higher than the high to ensure that you're buying into a rising stock. Let's take this a step further. Let's go to our watch list and let's go look at, do I have oil stocks? I've got petroleum stocks. Let's go look at petroleum stocks. Same kind of thing. How many stocks are in here? I've got 80 stocks that are in here. A lot of them are a little expensive, some not as expensive. Let's go look at the watch list average of these stocks. All right. So we looked at the stocks that made the news. Let's go look at the average. Is it the time to buy oil? Folks, I'm looking at 80 stocks in one watch list. Is it time to buy oil? Look at the picture. Look at the picture. So instead of getting caught up in the news and seeing the stock that's running, the stocks that are running, those are good trades. I wouldn't tell you to stay with those stocks for long term. This is the movement, folks, of 80 oil stocks. Are you ready to jump on board and back the truck up and say, I'm ready to go? This is the story. This is the analysis that we give beyond just people telling you, go buy oil. All right, so hopefully that makes sense. That's my oil story. Any questions, Joey?
No questions, just comments.
Did anybody say they hate me?
I'm not gonna.
And you know something? Some of you may not believe, may not agree with me. That's all right. How about we got KEGX up 107% today? Stock is grossly overvalued, has no good upside potential. It's not a safe stock, and the only thing that's looking good in the major indicators is that it's moving up. Negative earnings. Negative earnings per share. Negative earnings per share. Negative $50 on a stock that's trading at 50 on a stock that's trading 675. Yeah, something ain't right with that.
Steve said you don't have any pipeline stocks in your list.
I don't have any pipeline stocks in my list. Are you sure? I might.
No, I'm in your first 3, but.
Oh, maybe in my first several, but remember, I'm looking at a list of over 80 stocks. I bet you I've got some pipeline stocks. Hold on. Petroleum industry. Let's go see. I want to see some petroleum. There's pipeline. I got some pipeline stocks in here. All right, and I can always tell by my industry in my list, I got some pipeline stocks in here. Pipeline. So yeah, it looks like I do. It looks like I tried to look at everything in the petroleum when I put this watch list together.
How do you track dividend per share?
We have dividend. Here they are right here. We have the dividends in my list of my watch list of stocks. Here's my dividend. These are my dividends, but they're annualized. You have to divide by 4 to see what they are quarterly.
What was the question?
The question was, how do you look at dividend per share? The dividend is as one of the columns in my watch list. So there's my dividends. These are my dividend paid, but they are annualized, so you have to divide by 4 to see what they are quarterly. Any other questions?
What kind of membership should we have to be able to see this table?
You can have, the question is, what kind of membership do you need to have to see this table? These stocks I've put together for you from all of the different petroleum industries, whether it's field services, pipeline, exploration. I went through all drilling. I went through all of the petroleum industries. In this list, stocks again had to be greater than $1, and their average volume had to be greater than 100,000 shares. To build that's to build the watch list, but you can have the basic software in order to be able to build that watch list. All right.
And what is GRT again?
GRT is the earnings growth rate. GRT is the earnings growth rate. In case you ever get confused about what any of these indicators are, if you right-click on any stock in this list and go down to View Full Stock Analysis Report, let's go straight down to the GRT. GRT is the earnings growth rate. There it is. Reflects a company's 1 to 3 year forecasted earnings growth in percent per year. This is -5, which VectorVest considers to be very poor. Great question, but you can always right-click on any stock to get that stock analysis. If you're new to the software, I suggest that you print one off. All right, let's go back to our watch. Any other questions, Joey?
Nope, that's it.
All right, let's go back to our watch list and let's go to our next story. All right, good questions thus far. Let's go to the next story. And the next one is on Brent oil. Brent oil takes a beating, lowest since 1999. Still part of the oil, and that's going to screw up when you make the video, but that's all right. This is still part of the same story. There's where I got my WTI for that watch list and my watch today. I may see. Say again.
OBS cut out. Did you get a message?
I didn't get a message. I didn't see a message. Can they hear me? All right, so all I'm going to say in regards to oil, just be careful with it. You may find some stocks that are moving from the oil. If you take them, just be careful with them. I'm not going to say it's the right time to buy oil just quite yet. We've got too much a supply of oil. All right, now let's talk about, real quick, tankers. Oil tankers are sitting on the sideline. Oil tankers surround California with nowhere to unload. That still goes with the oil story. Man, this is still talking about the oversupply of oil and why oil for the right now is not the way to go. These are the two stocks that I looked at already in the watch list, MPC and CVX for the oil stocks, but this is just more behind why it's not the right time to buy. All of these ships just holding oil, sitting up, they go, all right? So, next. Steam wars. You're gonna make that? You're gonna make it do that?
I think you did it. I think we're good.
All right. So let's talk about Steam wars. Everybody's at home. Netflix looks to raise $1 billion coming off its big earnings. So earnings was coming out on Netflix last week, I believe, and I said just be careful with it. They beat earnings, but the forward guidance wasn't there, so the stock's price fell. Coming off its big earnings report last night. Announces a debt offering of about $1 billion in euros. It's an interesting move considering the company hours ago reported $5.2 billion in the bank, along with an undrawn. They got a $750 million credit, just chilling. All right, speaking on the big earnings report and a knee-jerk sharp move higher following, that's evaporated. Shares are now down 1%, and that was on the 22nd pre-market, considering the near negative 50% run higher in the March low. Little profit taking might have been expected today. So, in looking at the stream wars, let's move over to the watch list. Go back to my watch list. What's in that field? We have Netflix, we have Apple, we have Disney. Those are the three that I have primarily. Netflix, Amazon. Where's Amazon? Do I have Amazon in here? Did I not put Amazon in here? Joey, why did you not let me put Amazon in here? Oi. All right, I'm going to put that in here real quick. I got to add that. because that's part of my streaming, right?
Glenn didn't do it.
No, it's not Glenn. There it is. Whatever.
Glenn didn't do it right.
Apple and Disney. Let's go peep them out real quick. Netflix, the big boys. Everybody's chasing Netflix. Still overvalued. Amazon, way overvalued. Apple, I'm going to call that fairly valued. Price and value are real close to each other. And Disney overvalued. Let's look at their indicators. Relative value, upside potential on Netflix, still above 1. Amazon, below 1. Apple has good upside potential, relative value above 1, and Disney, not there. Relative safety, all of these stocks are safe. All of these stocks are safe because for the most part, they're making money. All right, all of these companies are safe. Disney's not only just in streaming, they've got their theme parks, which they just started opening up in China. So there's a lot going on with Disney besides just streaming, but it's part of my stream wars. And so all of them have the capability most likely to meet or exceed their earnings expectations and relative timing. All of these stocks are going up with the exception of Disney. RT tells me the short-term price trend. The one that's moving up the most is Amazon, but Netflix is right behind it. Then Netflix growing their earnings at 27% a year. Amazon 21%, Apple 14%, and Disney is growing theirs at a negative rate of negative 6% a year, and they all have positive earnings. The biggest one is Amazon. Well, it's the most expensive one on here, so it's got an earnings of 29 bucks. Keep in mind that our earnings is 12-month forecasted ahead. Let's go take a look at these stocks on the graph. These are our streaming stocks. Let's go see what's rock and rolling with them. Put them on a 3-month graph. As we do that, Netflix, rock and roll. Everybody's at home. I think a lot of people are coming back to Netflix as far as subscriptions. But even with that, found a level of a high sitting at about 449.52, pulling back. If I'm going to think about getting back into Netflix, let's see if it can break above that level of resistance. If I'm still currently sitting, holding Netflix, I'm okay. Leave it alone. Even with the pullback, this is why looking at a moving average or some semblance of a stop keeps you from being emotionally involved. Take the emotion out, have a stop in place. I do like that the stock's RT is above 1. The stock's in an uptrend. Volume, even with today's activity, is at or above the average volume. I like Netflix. I still like Netflix. Right now it's pulled back. If I'm not in it, I'm going to wait for it to break above the high. If I'm still currently in it, leave it alone. I should be happy. Amazon, again, another stock right at a high or a level of resistance sitting at about 24.60. Stock is clearly above the 20-day, RT above 1. Watch volume, though. As the stock's price is starting to level out, volume is pulling back. This is a sideways move. Be careful with Amazon. If you're still in it, leave it alone. If you're not, let's see if it can break above the high before you get into it. Apple, same kind of scenario. A little bit of a sideways move as the stock's volume is moving down. RT is still above 1, but pulling back. Apple's losing momentum as far as moving higher. If I own it, leave it alone. If I'm looking at this 20-day exponential moving average or the 20-day, it is 20-day exponential, let's see if it breaks below that. Use that as a level of regress, but I have another level of support sitting at about 273.37. All right, a little bit of a wick today, a little bit of selling pressure on Apple today. And the last one is Disney. Notice that all three of them are a little bit in that sideways move, which is kind of interesting when people are at home subscribing to these. You know, my wife was doing Bible study by way of Zoom the other night, and I was in the bedroom looking at all of the Hulus and Netflixes, all of that stuff. You know, it's still hard for me to try to find something on TV. Do you experience that too, Joey? Joey doesn't because he knows what he wants to look at. I don't always know what I want to look at. But I still find it hard with all of those streaming services. Unless I'm knee-deep in a series, it's hard to find always what you want to see. Very interesting. Same thing with cable. Maybe I'm just a picky guy. You think I'm a picky guy? You think I'm a picky guy? We're going to really fight later.
Let's get it.
All right, that's fine. So those are my stocks for the stream wars. Anybody have any questions? Anybody have any questions?
Igor wants to know, how do we get all these parameters? Are they from Yahoo?
Well, how do we get all of these parameters that you see here? These parameters are in the VectorVest software. These are our parameters. We don't have to go out any place else to get them. So when I'm looking at RVRS RT, you're not going to find these anywhere on the internet. These are just germane. These are proprietary indicators for the VectorVest software. Anything else? Joey's in the background just typing his little fingers off. He's got little sausage fingers.
I don't know how to question.
All right. You can read them a little faster, though. Wow. Really?
How do I get a watch list like yours on the mobile app?
How do you get a watch list like this on the mobile app? I will invite you to come over to Patrick's. We do have a Facebook Live every Thursday at 11 o'clock where Patrick walks you through how to build a watch list of your own stocks on this phone. All right. And I can't do it here because I actually, Joey would have to set this up, but you can build, if depending on the level of app you have, you can build up to 10 different watch lists. So you can build your own watch list, but I will invite you to go to our Facebook app, and every Thursday at 11 o'clock, Patrick France, who is a senior instructor like myself, walks you through how to set up your mobile app and set up your watch list on a mobile app. Any other questions, Joey?
That's it, sir.
All right.
Thank you.
You're welcome, Joey. Joey sometimes is nice, but not always. All right, let's go to the next story. Money flow spikes in COVID-19 vaccine players amid rush for early data. Everybody and their mama is trying to get a vaccine for coronavirus. There's a lot of stocks that are moving. Tom, are you still looking at the coronavirus stock list every day and sorting it by percent price change?
Are you yelling at him at home?
I'm yelling. I want him to be able to hear what I'm saying. Tom, can you hear me? Are you using the coronavirus watch list, sorting it by percentage price change to see what stocks are moving? I know we're starting to do it in the Jockey Club. All right, so investors are driving up COVID-19 developers amid a mad dash to launch studies to generate preliminary safety and what's that word? Immunogenicity data? That's a big word.
Immunogenicity.
It's not, you don't try to say it like it's immunogenicity.
That's what I said.
That's not what you said.
That's exactly what
Immunogenicity. Sound it out, Joey. Use your words.
You had to say
Use your words. The first to do so will undoubtedly see a healthy jump in share price. NVAX is a big stock that's been moving. How about it's up 30%? That was a few days ago. MRNA, this is my favorite right here. I think that this stock is real close to getting one of the closest ones. VXRT, I own it personally. I make money in it. INO, I own it personally. There's a lot of stocks in here. So, you know, we've created another watch list. Let's go out to the software. I've got a watch list of some of these stocks. PSTI, MRNA, CODX, CODX. Was that the only three? Yep, that was the only three. Let's go check these out. Pluralstem, way over its value. People are willing to pay a premium to own that stock. Moderna, way over its value. All right, keep in mind, when you find a stock that's trading high over its value, a lot of times it's going to be trades. CODX, way over its value. Now, how do I know that? Because look at the long-term price appreciation potential relative value. None of these have relative values greater than 1. None of these are stocks that you want to hold the long term. But if you look at RT, these stocks are rocking. All right, these stocks are all have RTs above 1. These are trades. Thus the reason. Did Tom ever answer me about that list? Does he sort the coronavirus list?
There's a lot of people in here talking.
There's a lot of people in here. Notice that a lot of these have negative earnings growth rates. Again, that's still more of a reason why you don't want to hold a lot of these pharmaceutical stocks long term. All right, so that's just analyzing them. The good one, though, CODX does have positive earnings growth, whereas Moderna does not, Pluralstem does not, but I'm really liking Moderna, and again, these are trades. Let's go look at their graphs. View the stock graph of these stocks. These are strictly trades, 3 months. Why? Because they go up, they go down, they go up, they go down. A little bit of selling pressure on PSTI as the stock's price is moving up. What's volume doing? Be careful with that. Not as many people jumping behind PSTI right now. Let's go to the next one. This is my favorite. Moderna, right now, big pullback right now. Both of these are still above their 20-day exponential moving averages. Both of them have RTs above 1. Watch the volume. You time these trades. These are trades. These are not long-term plays. CODX, a little bit more of a sideways move, butting up right against resistance at 1590. Butting up. RT is above 1. Let's do this. I got to watch this for that. Let's go to our coronavirus stocks. I've set this up so that you can take snapshots of these. I'm not going to do it today. If you go back to our past videos, I've given opportunities for you to take snapshots of these stocks. I've got 39 coronavirus stocks. And what I like to do, and especially in our jockey club, every morning in our trading room, we sort this list by percent price change. Now I can see every day which stocks are the ones that are moving up. Most likely, look at these. RVs are below 1. These are not stocks that I want to hold long term. But if I can make half of that, what if I'm up 7% on PSTI, or up 6% on that, and back and forth throughout all of these stocks? I would be a happy individual. It's a good way to be able to watch and trade in a trader's market, to trade coronavirus stocks. This is a great way. Build the watch list every morning before the market starts up or as the market is opening. Sort this watch list by percent price change. It's a great way to find trades. Any questions, Joey?
Yes, there is one. I'm afraid to step back into the market. How to know when to buy?
All right, so we started that. Question is, I'm afraid to step back in the market. When to know when to buy? Let's go back to the market timing graph real quick. I'm going to put on the market timing graph. Depending on how you invest in the market, we have several different market timing calls. All right, if you're a lot more conservative, I don't have an up call on our slowest, most conservative call. On our middle of the road swing trading call, DEW, we got an up call on, oh crud. We got an up call on 4-6 and it's still in play even when the market's moving sideways. If you're a little bit, now, if you made the statement of, you're a little scared to get back into the market, my suggestion would be to wait for the slowest, most conservative timing call, which is the confirm call. It's going to take a while to get here, but once it does, you can have more confidence that you're on the right side of the market. All right, Igor.
Read this or not? He keeps posting.
Can you spend 2 seconds to explain your table, how you get all those parameters from Yahoo? What is the formula? No, Igor, I already made mention of that. This is the software. This doesn't come from nobody else but VectorVest. So, in order to get this information, Igor, you got to have the software. Ain't no way to get around that. You don't go to Yahoo. You don't go to Google. That's that. It's here. The only way to get that information is right here. That's it in a nutshell. All right, that question you can't ask anymore. And no, you don't. It's not a personal spreadsheet. This is the VectorVest software. All right, this is the VectorVest software. That is the only way to get all of this information is to have the VectorVest software. All right, do we need to go up on my good?
I think we're good.
All right, and I saw something that said, would you hold coronavirus stocks? Did it say overnight? The answer to that question is, if my stops haven't gotten me out during the day, then I'll hold it overnight. All right, then I'll hold it overnight. But for the most part, my stops will most likely get me out that day. Most likely, my stops will get me out that day. All right, we good? All right, let's go to the next story. Let's go to the next story. Oh, let's go. What I have? Oh, these are stocks that caught my attention. AMD launches budget Ryzen processors. I don't know nothing about that, but I think that everybody and their mama who knows about this is big. That's all I know. All right, they're getting out ahead of Intel's Core i3 lineup. AMD announces the quad-core 8-thread Ryzen 3 3300X and 3100 processors. I ain't that tech guy, but that's big for AMD. All right, so that's a stock that caught my attention. Another one, Microsoft, the perfect setup. Microsoft will be reporting its quarter 3 earnings on April 29th, which is in 6 more days. Investors should keep a close eye on the company's Surface LinkedIn and Azure results, along with its segment level sales figure. Hey, it's just saying keep your eye on, not keep your eye on the MTI, but keep your eye on Microsoft. Microsoft is scheduled to record its earnings. Analysts are expecting its revenues for the quarters to come in at $36.93 billion, representing a revenue growth of around 20% year over year. So Microsoft is a company that you want to keep your eyes on. That's what it comes down to. Next one is Tesla. Investors pick Tesla over GM Toyota, the lead emerging auto tech post-coronavirus sales in a crisis. Interesting that Tesla is the company that they're looking to lead the automobile industry out. Investors have more confidence in Tesla emerging from the coronavirus pandemic, better positioned to lead all electric and autonomous than do any traditional automakers. Very interesting. Tesla's right now is up 67% for the year. That compares to GM sliding 42% and Toyota down 14%. Tesla's on the rise. And the last one is on the tankers. This is the tanker stock surge as global oil market collapses because there's a lot of tankers sitting out in the water. There's one stock in particular that I wanted to show was NAT, Nordic American Tankers. So let's go back into my watch list. All right, these are my stocks of interest. Every week I do bring out stocks of interest, stocks that catch my attention. Let's go see what stocks I got in here. Oh, another one was Snap. I didn't put that. Snap beat, is that you? Oh, Snap busted through earnings. That story came out late, so I didn't put it in there as a story. But Snap is in here as well. Man, that's kind of cool. Snap, Microsoft. What else was in here? Tesla. There's my tanker. Nat. What am I missing? Microsoft. AMD. And there's AMD. There's my 5 stocks. So the tanker, I'm going to call that slightly undervalued, good upside potential. Advanced Micro, slightly overvalued, good upside potential with relative value. Remember, relative value is the stock's upside long-term potential. Microsoft, it is overvalued, good upside potential. Tesla, way over its value. The upside potential is not there. So I'm thinking that a lot of what you see on Tesla is more speculation than anything. They are growing their earnings at a clip of 30% a year, though. And Snap, way overvalued, no upside potential, but they beat out their recent earnings. Looking at the tanker again, safety, not there on that. Advanced Micro, look at that, as a stock that's slightly overvalued, good relative value, relative safety, relative timing. This is probably one of the better stocks in here, along with Microsoft. Good upside potential, good safety, and moving up in price. Tesla, the upside potential is not there, but it is a safe stock that is going up in price. And Snap, the social media company, Snapchat. Do you do Snapchat? I don't do Snapchat. Anyway, right now, overvalued, no good upside potential, no good safety, but the only thing that's working for is that it is trading higher right now. That is a trade. Whereas companies like Microsoft, companies like Advanced Micro, companies almost like NAT are longer term holds. All right. If we go look at their equity curves, go look at their graphs. I always look at a 3-month graph because what happens every 3 months on a stock, the stock has earnings. Earnings is the biggest mover of a stock's price, so that's why I always look at a quarter when I look back. Snap, I bet you that's the earnings play. There's earnings. There it is. There's the earnings date right here. Stock jumped up, a little bit of give back today. Not a ton, but a little bit of give back after the earnings play that occurred on 4/21, 2 days ago. Really blew earnings out the water. It showed here yesterday, a little bit of give back today. All right, next one, Microsoft. I like Microsoft above the 20-day exponential moving average, but down day today, wouldn't pull the trigger on it today. Always make sure before you pull the trigger on a trade that you're buying into a stock that's moving higher. All right, same thing with Tesla. Tesla was nicely above, moving down a little bit sideways, but today is a down day. Wouldn't touch it today. If I own it, leave it alone. All right, it's above the 20-day, leave it alone. Wow. Nordic American Tank. I love the green bars, but they're filled which means the price started at the top of the candle and came down. 3 filled, that's more of a bearish move right now. I know that they're making money because they're sitting out in the water. Just be careful with it. Love the volume, love the RT, but that is a bearish indication. Just be careful with it for the time being. All right, that's all of my stories today. Anybody have any questions in that segment, Joey? Oh my gosh, why is it taking you so long?
Because there's a lot of people in there.
Oh, I know there's a lot of people in there. Joey's sifting through the questions to find out which one I need.
Just comments.
Just comments? All right. So, now we get to the most exciting part. Besides all of the stories, now I get to look at your stocks. Somebody said they want 5 stocks long and 5 stocks short. Yeah, that's not going to happen. What I am going to look at is some of the stocks that you're interested in. I'm not here to give out any stocks except for the stocks that are in the stories. That's not my deal. My deal is to help you to analyze the stocks that are in the story, and I will give you an opportunity to look at your own individual stocks, and Joey is going to give me those stocks now. So that's how that works. This is all about staying on top of what's going on in the market to help you with those stocks. Some of the stocks you may not know about, but some of the stocks you may own, and at least you're getting some update on what to do. All right, Joey's going to start giving me the stocks that we're going to look at. AMAT.
NVDA.
And NVIDIA. You just keep going. APD. APD.
ENPH.
Oh, Mother Subi. All right, AMAT, comma, NVDA, comma, APD. Okay. ENPH.
ODFL.
Old Dominion.
JPM.
JP Morgan.
INO.
Yeah, that's a biopharma.
Oxy. OXY.
OXY. Occidental.
What these guys are putting into LUV.
LUV. You got control over that, Drew.
BYND.
Beyond Meat.
ZM.
Zoom. Nugget.
NOW.
Oh, ServiceNow. Yep.
CARA.
Cara Therapeutic. Okay.
BRZU.
Brazil. Okay.
PLNT.
Planet Fitness. Nobody's going to Planet Fitness. I have a subscription there, but I ain't going.
Oh, we know that.
Shut
EROS.
up. EROS. You talking, Joey?
TTD.
TTD. Trade. What is that? Something as a broker.
And let's pick a couple here from somebody that don't add in a lot. PDD.
I think I already got that in there.
That one.
Nope, I didn't. Okay.
And UFPI.
Okay.
And let's do this last one. XOM.
Exxon. All right. So here's all your stocks. Let's pump them out. 3 months. AMT. Applied Material. Above the 20-day exponential moving average. Where's it approaching? It's approaching 2 levels of resistance sitting at 52.59 and 53.85. Really would like to see the stock get out of its own way. I do like that it's above the 20-day exponential moving average, but moving sideways. Because it's moving sideways, RT is waffling back and forth. That makes sense. And volume is falling off a little bit. That also makes sense. Stock's not going up. Stock's not going down. Volume is not there to back it up just quite yet. All right, so if I'm in AMAT from a swing trade perspective using the 20-day exponential moving average, leave it alone. If I'm not in it, let's see if it can break through both of those levels of resistance first. Next stock, NVDA, nicely above the 20-day exponential moving average. And the cool thing about this, even when the stocks pull back, this takes the emotion out. Did it break below the 20-day exponential moving average on an end-of-day basis? The answer to that is no. Still rising higher. RT is above 1. Watch volume, though. As I'm watching the stock run higher, I would rather see volume running up with it. But if I own it, leave it alone. If I'm not in it, let's see if it can break above that level of resistance right there. That helps you to buy it. Make sure you're buying into a rising stock, okay? APD, same kind of scenario right now, moving sideways. It's got a couple of levels of resistance. Look at where it stopped right there. That stop with today's action stopped right at, good Lord, stopped right at this level of resistance at 219.12. Right now it's at 213.05. That is a good level of resistance that it can't get through. And then it's got another strong level of resistance at 224.47. So with that being said, on a 3-month graph, if I own it, I'm just moving sideways. This would have been a good opportunity to get out right here when the stock's price broke below that 20-day exponential moving average. Now, no matter what moving averages or whatever stops you use, this is a good way to know when to get out.
Why do you use exponential versus simple?
The exponential tracks price. So the question is, why do I use exponential rather than simple? Exponential tracks price closer, so it'll get me in and out a little faster. Simple, if I went and put on a moving average, add moving average simple 20, watch this. See how my exponential tracks price a little closer than the simple? That's why I like using exponential. All right, it'll get me in and out of a stock faster. Good question, by the way. All right, so let's go to the next stock, ENPH. I like this stock a lot, just not the right time to be in it. The stock's moving sideways. If I'm not in it, I'm not jumping in it yet. Let it get out of its own way. Let it get out of its own sideways move right now. The stock, once it does have good upside to about the price of 59.08. All right, once it can get out of its own way, it's sitting right at its own level of resistance. Let it break above that. If you didn't get out when it broke below that 20-day exponential, how about it did go back up again? Even with the going back up again, I wouldn't start getting into it now again until it breaks above this level of resistance. I do like that the RT is back above 1, but it did it back here too. It went above 1 before it pulled back. I need more than just the RT to move above 1. I need confirmation of getting out of its own way. All right. Wow. ODFL, big bars. All right. Big bars, a little bit more volatile, big bars, but in a channel as well. Channel sitting between 124 and 140. Look at that big open candle today. Where did the body stop? Look at that wick. Stopped right at that level of resistance. That's the reason why I always want you to buy higher than a level of resistance. Where did it stop? Right there. That helps to give confirmation. If I put my order in higher, gives me confirmation. Look at that. Break above. Look at that move up. All right. So it's in a channel. I like the big update today. If you had an opportunity to take advantage of it, great. Other than that, I'd wait and see if it can break above that level of resistance. Man, JPM, a lot of stocks exhibiting the same characteristics. You know why? A lot of stocks are looking at just like the market, because the market's direction affects about 80% of the stocks in the market. So if the market's moving sideways, about 80% of the stocks in the market are going to be moving sideways. When the market's moving up, about 80% of the stocks in the market are going to be moving up, and vice versa when it's moving down. A lot of stocks are exhibiting this sideways move because the market overall is exhibiting this sideways move. All right, that's in case you didn't know, now you know. And knowing is half the battle. Now, something else about JP Morgan, it is below the 20-day exponential moving average overall. A little bit more bearish than some of the other stocks, so I probably would not be in it right now. If I own it, well, at some point in time, I do have a level of support sitting down here at the low. That is your last line in the sand to get out of it if you're not out of it as of now.
How do you get those channels?
How do you, I got support and resistance. VectorVest will draw these support and resistance lines. If you go to add parameter, go to technical analysis, we can put their support and resistance, and in VectorVest, the support and resistance will automatically show once you click on the box. Notice that right here, before you click on the box, it tells you there's one support line and 2 resistance lines found. So when you go to see the channels, it's already calculated. The support and resistance in VectorVest will automatically calculate that for you. All right, let's go to the next graph. Woo, INO. I think we got into this today, a little bit of a pullback. I don't know if we got out of it or not. I haven't been able to totally watch it. Nice move up today, but look at the pullback. A little bit of selling pressure after it gapped up. A lot of people have made money. 1, 2, 3, 4, 5 days the stock's price has gone up. I'm thinking that's a little profit taken. Now, this is what I'm looking for. Price going above the 20-day exponential moving average, breaking above resistance with rising volume. That is the perfect storm of a stock that I'm looking for right there. Coming off of that level of the 20-day exponential moving average, breaking above resistance, rising volume. That's the ideal picture you're looking for when you go to buy a stock. Hopefully everybody's looking at that for the premise of, wow, that's the kind of stock I want to buy. But the stock is giving some give back today. I probably wouldn't take it now. We did get into it earlier this morning. I don't know if we're still holding it or not in the Jockey Club, but we did get into it earlier this morning. Let's go to the next one. Occidental. Just at that value of the 20-day exponential moving average. RT below 1. Stock's not in an uptrend. Stock's been beaten up. Would really like to see a couple of things. One, want to see the stock's price break above that 20-day exponential moving average and get out of this level of that former high before I jump on board with it. All right, if I'm in it, I shouldn't. There's nothing that tells me that I should be in it just quite yet. All right, that's my opinion. Looking at Southwest, and all the airlines are getting beaten up. How about it's below the 20-day exponential moving average, bouncing off support? Yeah, I need more confirmation before I jump on board. At least let the stock get above its 20-day exponential moving average before I take a bite of it. All right, I like Beyond Meat. I've made a lot of money on. I doubled my money in less than 1 month on Beyond Meat back at $100 when I traded at $100, somewhere way back here. Stock's price above the 20-day exponential moving average, coming up to a level of resistance. Actually, I'm going to take that line off because there it is. There's my level of resistance sitting at 99.61. If it can break above that, I got good upside to the value of 130. Let it break above that value of that resistance. I've got good upside. The stock is clearly above the 20-day exponential moving average. The stock's RT clearly above 1. Let it get above that. That might be a really good play. I need that confirmation, though. Let's go to the next stock. Zoom. A lot of churches using Zoom. A lot of people are using Zoom. Zoom is rocking. Nice high today over the last 3 months. RT moving above. Yeah, everything is good about it. 12 cents higher than the high. 12 cents higher than the high. Nugget. Man, it had to split. It was up as high as almost $80 today. Pulled back. Again, gold, just be careful with gold. That's again, all I got to say. Look at that pullback today. Look at the big wick. That's what we like to call a gravestone doji. Big wick, very little body. Be careful with that. All right. Go to the next stock. ServiceNow, a lot of sideways move right now. It's still above the 20-day exponential moving average. RT is above 1, but look at that slightly falling. That's a smart indicator. That could be telling you that the trend of this stock is falling a little bit. 1, 2, 3, 4, 5, 6, 7, 8 days in a row, the stock's moving sideways. Down day today, wouldn't pull the trigger today, but definitely moving sideways. Let's go to the next one. Cara, drug biomedical. I like that it's moving higher. Love RT is moving higher. Watch the volume. Stock's price is going up. Volume is starting to pull down a little bit. Just be careful with it. I'm not telling you not to get into it. Make sure you buy higher than the high before you pull the trigger. Next stock, wow, BRZU. Did they go out of business? What's up with that? That stock ain't moving. Just not move. Oh, it split too? When did it split? It split 1 to 35. Good, and Jan. I'm not touching that. I'm gonna be like MC Hammer. You can't touch this. Doom. I wouldn't touch that. Not even a little bit. All right. Planet Fitness above the 20-day, moving sideways. RT below 1. Yeah, I would wait until the stock's price starts moving higher and at least RT gets above 1. You've got a couple of levels of resistance for it to break through as well. I do like that it's above the 20-day. But RT is not backing up. But I do like the rise in RT as the stock's price is moving higher. Just not ready to pull the trigger on it yet. Eros, big down day. Was that an earnings play? Let's go look. No, that was not an earnings play. I don't know what happened here, but whatever it is, it was bad. And the stock's price, even with the bad move, still above the 20-day. If you had the gumption to still hold it through that, God bless you. Good Lord. But it's above the 20-day exponential moving average. Down day today. I would really like to see if we can overtake that bar. That's a huge bar. All right, and yeah, that's all I can say about that. All right, let's go to the next one. TTD Trade Desk, Big Wick, stop where? Take that off. Big Wick, stop where? Look at that, right at resistance, sitting at 266.18. Man, you gotta love that. Look at that wick. Stop right there. That's again the reason why I always like to buy when a stock breaks above that level. I love the volume. I love all of that. But look at that pullback right from resistance. All right. PDD. Nice move up today. Gave back a lot after it gapped up yesterday. Gapped down today. Be careful of gapping stocks. Gapped here, gapped here. Gapped here. Always be careful. As quickly as the stock can gap up is as quickly as the stock can gap down. Just be careful with that. RT is pulling back a little bit. If you're in this stock, it's above the 20-day. You're happy with that, leave it alone. Let your stops manage the trade. That's a shooting star pattern with follow through. Excuse me, that could be another thing to look at. Shooting star pattern with follow through. That might be enough for you. If you haven't taken anything off, might want to take half off. Might want to take half off. It's still above the 20-day. RT still above 1. But that is a candlestick pattern with follow through. All right. And a couple other stocks, UFPI moving sideways. All right. Right in between, excuse me, these two lines. Right in between these two lines, a resistance of 37.90 and a support of 35.08. All right. It's in a channel. Oops. In a channel. I do like the rising volume, but overall the stock's in the channel and not above the 20-day exponential moving average. And the last stock is ExxonMobil, above the 20-day exponential moving average. Let's see if it can get out of its way here. Volume is pulling back. That makes sense as the stock's price is moving sideways. All right, that's a lot of stocks. I'm done. Joey, are we good? Joey's not listening. I'm going to do my own screen now. I don't need your help. All right. So with that, folks, I do want to see my chat, though. Make that happen, please. Now, Joey's going to put up the chat so I can see it because he takes it away. What it does for me is it keeps me focused when he takes the chat. Stop. Stop messing with it. Stop. All right. So Jennifer was here. Thank you, Jennifer, for being here. I appreciate that as well. Booze. Hawes to get stock. What? Mickey, I'm not sure what you just said. How to get stock. What do you mean? How to get, I'm not sure what you're asking, my friend. Good job, Glenn says, Stickman Stickle. Hey, Kirby says, 97 likes. Can we break 100? Can you guys get me up to 100 likes today? Glenn, point to the likes and make it happen. Where's the likes? I don't know. Can you put me back on? It's somewhere below here. Is it down there, Joey? Yeah. It's right there. Look right below my finger. There's the likes. All right, down there, look at the likes. Hit the likes. Let's get to 100. That'd be great. That'd be great if we could do that. All right, thank you all for being here. Man, hit the thumbs up right below Glenn. There it is. Hit the thumbs up right below. Huh? Oh, there it is. So they're hitting the thumbs up. So for all my people who have never been here before, hopefully you liked the presentation. You like what we had to do. Don't forget to subscribe to the channel.
And let them know that they'll come out.
And that who will come out?
And that the videos will come out over the course of the day.
Oh, the videos, the recordings of all of this, after Joey chops them up and condenses them, will come out over the course of the week.
My girl wants to know how to get the software for free.
How do you get the software for free? Why do you want it for free? Why does everybody want something for free? If it's worth it, pay for it. Put a link in there. There's a trial you can take. I think it's $9.95. If you want something for free, then no. So the trial is $9.95. If you like it, you'll keep it. If you don't and you feel like it's not for you, what if you take the trial for $9.95 and it more than pays for your trial?
It's $1.
It's $1?
99 cents.
All right, fine. It's $1. It's close. It's 99 cents. It's a 99-cent trial. All right, so Joey put that up there for you. Where's the like button? It's down below me, Maria. It's down below me. When do you announce the mug? What mug? Was I giving away a mug today?
When we sell mugs.
Oh, when we sell mugs. We're working on that. We're working on that. Hit that thumbs up right below, Glenn. Hit it up. Hit it up. Get to 200. Wow, get to 200. That'd be great.
38.
Did we really? Holy smokes, y'all pushed it from less than 100 to 138. Wow. All right. Hey, I'm paying $19.99. Maria, you're on an app. That's the difference. You're on an app. All right, the trial to the desktop software is 99 cents for a month trial. And Jim says, I paid 99 cents for a 1 month trial. There you go. All right. So, man, that just, somebody said I'm sketchy. Oh, that was no. It says you are now. Oh, should I buy Chipotle? Oh, I don't think, I don't know. I'll do that real quick, just real quick. CMG. Not today. Why? It's a down day. I like that the stock's price is moving higher. Today is just not the day to do it. It is at another level of resistance. Always keep in mind when you ask the question about buying a stock, always check to see where the stock is moving in regards to support and resistance. One last stock. CGC. Oh my God, ZYXI. Joey's going to take this away from me so I can't see these stocks. All right, CGC, comma, ZYXI. Nope, stop putting in stocks. I'm not looking at it anymore. All right, wow, no. Who put in CGC? Why? The stock is moving dead sideways. RT is below 1.
CGC or PCG?
You know, CG. Somebody said CGC. Somebody else said CGC. PCG. Yeah, I'm not taking that. CMG. Chipotle is moving down. Be careful with that. No, not on Canopy. ZYXI. Watch that. Look at the big wick at the top. Look at the big wick at the. Oh, they couldn't see. Look at the big wick at the top on ZYXY. That's a lot of selling pressure. It is above the 20-day exponential moving average, though. That's a lot of selling pressure. Be careful with that. Let's go to PCG. Again, no, not yet. Stock's moving sideways. It is above the 20-day exponential moving average. What's going to tell you to buy this? Let's get above that level of resistance where the stock's price stopped going up before. All right? How about JNUG? I don't have a mug yet. I'm not looking at a mug yet. So there's your PCG. I can't sell mugs yet. I don't have the store yet. Stop asking me about the store. I ain't got it yet. It's coming out. We're working on it. We are working on it. All right. And when it does, you guys better buy everything in it. That's all I got to say. And don't forget to comment, like, and subscribe. Love you guys for being here. Thank you for supporting the Trending Thursday. You guys are growing this site by leaps and bounds. All right, so don't forget to subscribe. Don't forget to like, all of that stuff. We're going to keep bringing you the content, and that's that. Adios, arrivederci. Peace.